middle America is being eaten alive by inflation right now. But if the moderates are allowed to vote and we're actually capable of electing a Congress that is full of moderate Republicans and moderate Democrats, then we might have the chance in this country to go back to legislating.
Welcome, everyone, to another episode of Inside the Markets presented by StockPulse.com. Thank you for joining us today. We are more than honored to be sitting down with Danielle DiMartino Booth. She's a CEO and Chief Strategist at Quill Intelligence, LLC, as well as a former Federal Reserve insider. Thank you so much for joining us, Danielle.
It's great to be here.
So, turns out inflation was not transitory. Is it here to stay, and for how long?
Yeah, that's a good question, because I think that certain elements that Fed Chair Jay Powell's been hoping for will end up manifesting. A lot of companies have gone from just-in-time inventory to just-in-case. So we're going back another era prior to when Japan introduced the idea of just-in-time inventory to companies actually starting to stockpile goods. So that could come back to haunt them, A, but B, we're starting to see, auto manufacturers say the semiconductor shortages is abating a bit. We're starting to see freight rates even start to turn down. The more important part of the puzzle, though, is housing and rental inflation, and the fact that Fed policy really let that horse get out of the barn. And that, I think, is going to prove to be more persistent. We're also seeing Americans, we're seeing a slice of the workforce, right? We had 4.3 million people quit their jobs in October. It's a lot of people. So we're seeing a slice of Americans who can command higher wages right now. So we can expect certain areas of consumption to continue to hold up because they're commanding the wages they want. The flip side of it is that we could be staring down what looks to be stagflation, because there are certain areas of the economy that are definitely slowing because there's no more stimulus money out there. So, I cited in almost every interview I give, Deloitte & Touche did a big pre-holiday survey and found that 15% that the highest income earners in America are going to spend 15% more this holiday season, and the lowest income Americans are going to spend 22% less. And that shows you right now that because, especially in housing, food, energy, gasoline, I was at the grocery store yesterday. They wanted $9.99 for a pound of bacon. So you can see how inflation is a truly regressive tax on the lowest income earners, and that this is already a policy error on the part of the Fed.
How bad will rent inflation in particular get, and what does that mean for Americans?
So I think that we're probably seeing the peaking of rent inflation, but at the extreme end of the example, as bad as it gets, Invitation Homes has been on earnings calls bragging about the fact that for new leases for single family rentals, it's able to charge 19% more than it did the last time around. 19%. That's just insane. I hear from people in Austin and in Boise and in hot markets that their rents are going up by similar degrees. The only reason I say that we may have seen the worst of the rental inflation is because of what Simplify Asset Management, Mike Green, pointed out to me recently. The rental eviction moratorium had basically a big hold button for 18 months on upwards of 1 million Americans, and that did not end until September the 30th. You have to give landlords have to give renters a 30-day grace period once they tell them that they're going to be evicted, which means that we're only just a few weeks into the actual eviction processing starting. So you are going to have increased vacancies that are going to be coming into the rental pool that will act as an offset to rental inflation. I don't think that's on enough people's radars.
Is that going to directly lead to an increase in homelessness nationwide?
I think that the optics are going to be very bad. We've seen an incredible increase in the United States in the number of households where there are multiple generations living under one roof, and that trend accelerated after COVID. You got 25% of adults still living with their parents. So, to the extent that there's not extended family for these people who are being evicted, unfortunately, many of which are going to be single mothers, then yes, we could indeed see, on top of as bad as the problem is, whether you've recently been to LA or New York, we could actually see increased homelessness.
And not only increase homelessness, but we actually see so there's a construction boom in the homeless parts of Los Angeles, for instance. You see shacks popping up that might look like something you would have seen previously in somewhere like Mexico. And patios are being installed too on the highways of tents in Los Angeles. It's actually quite a sight to behold. Now, is the Federal Reserve to blame?
The Federal Reserve is not solely to blame. In this particular instance, I think that the blame has to be spread to also fiscal authorities, because so much stimulus money was injected into people's checking accounts that they were able to spend more on, you name it. And in addition to that, there was something very fundamental about the exodus to the exurbs, as I call it. People leaving cities, people looking for bigger spaces, people looking to work from home. So these trends were real, but they're dissipating though. If you look at the Bureau of Labor Statistics data, back in May of 2020, working from home peaked out at 35% of the labor force. That's since dropped below 12%. So we have seen a lot of people go back into physical offices. And I think that that trend will continue. So there was this fundamental driver of house prices and apartment rents because people were trying to get out of the cities. That was initially. There was indeed too much fiscal money that was thrown at people who didn't need it. So a lot of the fiscal stimulus spending was wrongheaded and poorly designed. And then you've got the Fed. Then you've got the Fed buying up mortgage-backed securities and artificially repressing mortgage rates that all it stood to do was add fuel to the fire. And that's exactly what it did. So, and the fact that they haven't pulled back on this, on their $40 billion a month, well, they finally have, right? They finally tapered their mortgage-backed securities from 40 billion to 35 billion a month. But the fact that they didn't pull the plug on mortgage-backed securities once they saw that housing was becoming such a bad issue, once they didn't just say, you know what, these mortgage-backed securities purchases are no longer necessary, we're not going to taper them, we're just going to quit them. And I think that would have been the appropriate thing to do, because now you've got so many American families who've got severely stressed budgets.
But surely these mortgage backed securities were in better shape than those that led to the 2008 financial crisis, right?
Well, it's not the quality of the mortgage-backed securities, it's the effect that purchasing them has on mortgage rates and feeding the speculative bubble that we now know is in housing. On top of that, CoreLogic put out a report that said 1 in 4 home sales in the United States today is being made by an investor. These investors have been effectively exploiting Fed easy monetary policy to their benefit. They're taking advantage of this zero interest rate environment. They're levering up and they're coming in as all cash buyers, 1 in 4 homes in America, and making the situation even worse if you're an entry level buyer or a renter, because they're pumping up these single family rental rates as much as they are. They're building new homes to rent out. So you're talking about an entire generation of millennials who may forever be stuck in this purgatory of paying rent and not ever actually building the home equity that we like to think of as the American dream, so that you can then retire and own your home outright.
Do you have any suggestions for people who are looking at the economic outlook and just don't know flat out how to manage it or how to protect themselves from a situation that could deteriorate even further?
Yeah, I mean, it's difficult to say, because right now wealth in America is also so flagrant. I was at a shopping area in Dallas where all the toniest, nicest shops are, and there were lines around Christian Louboutin. There were lines outside of Chanel. There were lines outside of a Rolex store that sold out. So in so many ways, Americans right now are saying to themselves, "Wow, there's a lot of flagrant wealth out there." Well, that's of course there is. If you've been a beneficiary of Fed policy, the flip side of it is inflation does not appear to be dissipating as quickly as we thought that it would. And that makes it really difficult for your average American working family that's just trying to get by. So, in terms of the economic outlook, you know, winter is coming and so are the midterm elections in the United States. And we know that politics right now is as ugly as it's ever been. I think it's easy to anticipate that the 2022 midterm elections could make the 2020 presidential election look like a walk in the park. And that's how divided we are as a nation right now. And that in and of itself also has economic implications because you don't have a Congress that's ready to come together and the infrastructure spending bill, the bipartisan infrastructure spending bill, that wasn't a bad idea. Having it be filled with public union jobs, that's a pretty bad idea because that means that we're going to effectively make a game plan to waste taxpayer money. And this type of stimulus is going to be drawn out, for years and years and years, as opposed to having it be a public-private partnership, which was the case in many ways with the New Deal that created so much of the infrastructure that we still have to this day. But again, you weren't wasting taxpayer money. And instead, you've just got all this bickering in Congress and Congress doing a lot of nothing with their approval ratings at the lowest on record. President Biden's his approval ratings are the lowest on record. So I gave a whole speech a few weeks ago in New Orleans, and I said politics is economics. And right now, politics is economics. And I think your average investor has to pay very close attention to how contentious the situation is with naming a new chair of the Fed or keeping Jay Powell in office and what effect that might have on the stock market. So you really do need to be in a position where your portfolio is at the very least hedged because there's so much going on right now in Washington, D.C. that could have a detrimental effect on the markets, which I think is why we're seeing bond rates as stubbornly low as they are on the long end of the yield curve.
Will Biden make a change at the Federal Reserve, or do you think he'll stick with Powell?
It's a toss up. It's a complete and total toss up at this point, and that's really, really, really problematic. Um, it remains to be seen whether or not he's going to keep Powell in order basically to save the stock market, or if he's going to if he's going to nominate Lael Brainerd. And there's no certainty. You've got Tester out of Montana, you've got Manchin, you've got Sinema, you've got several moderate Democrats that it's unlikely that she would get their vote. So the last thing you want to do going into the midterm primaries, and I think we've just got a little over a month before we have our first primary. The last thing you want to do before going into campaign season is to nominate somebody to be chair of the Fed who can't be confirmed. So, and that's why the Biden administration said that they would have an announcement out by Labor Day, and there's still no announcement on who's going to be nominated or renominated. And I truly think the administration is paralyzed on this point, and that's also made for some nervous markets of late.
Should Brainerd make people nervous?
Well, I think some of Brainerd's views in the fact that she's on the record saying that banks are underregulated. She dissented 23 times in her capacity as being part of of banking supervision and regulation. So we know that she wants to crack down on Wall Street. And we also know, more importantly, that she has been an advocate in the past for a central bank digital currency. And a central bank digital currency could potentially be a slippery slope to making a conduit through which universal basic income can be delivered to Americans. And if we've learned any lessons from the past 24 months, it's that throwing money at people causes inflation and actually harms the economy more than it helps it.
And the poor are hurt most by inflation.
It's a regressive tax.
The central bank digital currency, what is that and why should people be skeptical of it?
Well, central bank digital currencies right now we're seeing a lot of chatter because China is so proactively introducing their own central bank digital currency. But remember, this is China. And the reason that there's skepticism around it is because there is concern that, as China will presumably do, that the central bank digital currency is used as a means by which to spy on what we're purchasing and see everything we're buying and see all of our financial transactions, because it would theoretically be an account directly held at the Federal Reserve, which at the Federal Reserve Board level is a federal agency, such that you would be basically spied upon. And in addition to that, central bank digital currency would be a separate conduit through which to potentially impose negative interest rates if people were to choose to hold money and save it as opposed to spend it. So again, these are very un-American type of prospects, and it's not necessarily going to be the case. The Republicans have actually put out a very short paper explaining that if there is a central bank digital currency, that it would need to be in the hands of the private sector and the public sector. Again, so that we would have the assurance that that all of our purchases couldn't be monitored.
In the 2022 primary, what should people be keeping an eye on? What's at stake? Will we see a repeat of what we saw in Virginia, an upset for the Democrats? What are
I
you
look.
expecting?
I think I don't even think The Economist ran a poll uh, recently, and they polled the entire populace of the country, and what they found was the majority of Americans are moderates. And I think that if there's anything that the gubernatorial race in Virginia taught us, it's that the moderates don't feel like they have a voice. And that's why they elected the Republican senator, excuse me, the Republican governor in Virginia. I think that that's why there are people who are joining Joe Manchin and Sinema and Tester. I think that there are other people in Congress who are currently in office who are saying, you know, I might need to get off this crazy progressive train. I might need to become more moderate because that's who the voters are. And if you have to listen to your constituency, and if your constituency is moderate because they're crazy, they're finished and tired with the far right and the far left, then you're going to have to swing moderate or lose your position.
Is there any good news in all of this? If I had to point to something, I'd say a resurgence of sorts for middle America. I think that both in the popular imagination and economically speaking, middle America is doing quite well. Would you agree?
Well, middle America is being eaten alive by inflation right now. But if the moderates are allowed to vote and we're actually capable of electing a Congress that is full of moderate Republicans and moderate Democrats, then we might have the chance in this country to go back to legislating and actually doing bipartisan type of deals that don't have to be as contentious as they are. And that I think would be a good first step in the right direction, followed hopefully by somebody who was also a moderate winning the 2024 presidential election. Again, The Economist did the poll. The majority of Americans, the silent majority of Americans, are moderate in their views, and that should be represented in Congress and in the White House.
Is it represented in Congress right now and just not
No,
being heard?
Possibly, but you're going to have to see more Congress people come out and vociferously say, "I represent the middle. I represent the middle ground. I represent the moderates." You're going to have to see them be more vocal about it, because right now the only thing you can hear are the people squawking on either end of the spectrum, and they just make so much noise. But if you hear more people in Congress be more forceful and say, "We're listening, we're willing to listen to what our voters are saying, to listen to what our constituents need, that the country needs peace, that the country needs to be united." You don't unite the country by trying to go from far right wing to far left wing policies. That's not how you do it. And that's just what we've seen since the presidential election. So what uniting the country means listening to the majority of the country in order to bring it together and legislate as such.
The year's coming to a close. It's November as we speak. What has 2021 been in your view? What are the biggest stories in your view? And then perhaps what can we look forward to in 2022 on the economic front?
Well, I'm fairly I'm fairly focused in my view. So I think 2021, when we look back, I think the biggest stories will be inflation and inflation on a global level, as well as the absolute turmoil at the Fed, the likes of which we've never seen, and really an entire economy and an entire country that feels like it doesn't have very many leaders. And I think that that's going to be the imprint that 2021 leaves. I think 2022, it's going to get ugly. I think that these midterm elections are going to cause more division, but I would hope that the polls would quickly reveal what we've just spent 5 minutes talking about. And that's that moderation is going to prevail. And hopefully the midterm elections bring a sense of peace. And that would be my hope for 2022.
Although there was several times more stimulus printed in 2020 than in the 2008 version of the bailout or stimulus programs, we did see, I think, a higher spike in the inflation, and people are feeling more pressure from those economic actions than they did in 2008 and
Oh,
on.
God.
Other than the homeowners, why is that? Is it because the money was given directly to the people to
Yes,
spend?
exactly. I mean, when you inject that kind of money, remember, it's not, think about the supplemental unemployment benefits. Call it 1,200 a month, 1,300 a month in the very end. The government, until September the 30th, was also covering rent, which on average is 1,800 nationwide, give or take. So the amount of money being given to people, the fact that there were these supplemental unemployment benefits, the fact that the child tax credit was made into cash payments, you could have had your health care covered, your utilities covered. There were all sorts of stimulus spending programs out there that, as long as you're not having to pay a bill, that's effectively cash in your wallet. So, and on top of that, you send out three stimulus checks in a row. And that's why I think globally, the United States right now is seen as being the bad guy, because fiscal stimulus of 43.2% of GDP in 18 months, that really made an impact on global inflation because it was so strong. So again, it was too much. It was simply too much, and it was directed at people who didn't need it. So that's why there's lines around Louboutin, and that's why Disney raised its prices to get into their theme parks. Because people have been spending money like drunken sailors, just like people in Congress have.
What would a moderate policy look like to get us out of this inflation nightmare?
Well, it's really hard to say. I mean, there's presumably a recession in between point A and point B of what you describe, and hopefully on the other end, reforms to our education system, an acknowledgement that public teachers' pensions were a very bad issue for the economy during COVID, when schools could have been open and mothers allowed to be in the workforce, investing in the next year's innovations. Throughout the trade war, to take us a few years back, I used to always complain that we were focused on soybeans while China was focused on semiconductors. We have to find our way as a country to invest in the economics of the future, in the technology of the future, and we have to find a way to invest in infrastructure that brings the private sector into the equation so that it can be done profitably without wasting taxpayer dollars, so that we rebuild the infrastructure instead of slowly becoming the third world country that we are.
Are there any sectors in the US that give you hope that are booming right now?
Oh, I think cybersecurity is an easy one. I think healthcare is another easy one. I mean, any place where there's massive disruption going on. I think the delivery of financial services also. making sure the unbanked are no longer unbanked, because we're digitizing so many of the transactions that we're doing. So I think any of these technological innovations of the future are fabulous.
The nice thing about the US system is that we have the state level and the federal level. So there's a lot of freedom to be done at the legislative level on the state level. So we've seen, for instance, blockchain legislation in Wyoming that gives innovators a sandbox so that as long as they're not doing anything obviously criminal, they have some leeway from the authorities. Do you have any comments on the digitization of society generally and blockchain's role?
I think blockchain is revolutionary, and I think we'll look back on it as being so. The same way we look back on the World Wide Web, when it used to be called the World Wide Web before it was the internet. The same way it was, in a world before iPhones, when we just had phones that could only make phone calls. So I think that there is an inevitability about it. I also would couch that statement in saying that at some point there will be international and federal regulations that apply to this area. They just haven't figured it out yet.
What's new at Quill Intelligence?
Well, we've just brought on a great new sales director. We are growing our product offering. Um, the Daily Feather has become an institution, which is fabulous. I mean, for $50 a month, you actually get institutional level of research. And then we've just rolled out QI Pro. So we've got a new platform for our institutional investors. It's going gangbusters. It's very popular. We've expanded all of our institutional offerings. We're providing great investment guidance to our institutional subscribers. So that's what's new at Quill Intelligence. We're blowing and we're growing, and we're very excited about this next chapter.
What's the focus of either your data products or your researchers?
So, our goal at Quill Intelligence is to make sure that all of our research, whether it's on any aspect of the financial markets, whether it be private equity or commercial real estate, any aspect of economic data, whether it be soft survey data or hard data that's coming out, like the non-financial, like non-farm payrolls once a month. We want for all of that research to be delivered through the prism of monetary policy and how it's perceived and how it's going to be treated by the Federal Reserve and by other central banks worldwide, because of my near 10 years of experience at inside the Federal Reserve and the unique vista that I can bring, the inside baseball, if you will, that I can add to what you would consider to be the regular form of sell side or buy side research.
What's some of the inside baseball right now in the real estate market, either commercial or otherwise?
Well, commercial real estate is interesting because I think that we have seen an acceleration of automation in the post-COVID era that has been very manifest in the level of investment that we've seen uh, in R&D, in artificial intelligence, in IT spending on the part of companies. So I worry that offices are going to take longer than we would think to recover within the commercial real estate world, because of the fact that there aren't going to be as many workers, period. And we've started to see outsourcing to, and I'm talking about outsourcing of bachelor level jobs. Now that you can put an entire law library inside of a piece of big data, you can have your paralegal be be grounded in Delhi if you want, or your architect. So I think accelerated automation poses a threat to the office sector in particular. I think that a lot of companies, big consultancies that used to spend a ton of money on business travel, I think when they saw that go straight to their bottom line and pump up their profits and pump up their margins, I don't think we're going to see business travel come back to the same extent, possibly ever, because companies have indeed made so much more profit since they've taken a lot of their workers. They're not staying up for a week in the Four Seasons, and they're not flying business class to get there. So that goes straight to the bottom line. So I think lodging could also be kind of in a hobbled state for a while, and commercial real estate is very overvalued, as we know. I mean, that's a known. And as far as residential real estate goes, I've done some interesting. I have my own show called Down the Middle on YouTube, and I recently interviewed a guy by the name of Dennis McGill at Zelman Associates, and he's done some revolutionary work on demographics. And there are not nearly as many homes that need to be built in the United States as what the National Association of Realtors would have you believe, which is nearly 7 million, according to their estimates over the next decade. They say 6.8 million homes need to be built over the next decade to make up for the number of lost homes, that the deficit of homes in this country. The real number is closer to 1.5 million, which means that I think a lot of new home builders, especially publicly traded home builders, are going to get way over their skis in this particular cycle. And we're going to have the discussion change from what it's been for practically a generation now, which is undersupply, 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 to all of a sudden, wait a minute, whoa, where'd all those houses come from? So I think that those are the two things you need to be looking for in 2022, 2023 in commercial real estate and residential real estate.
We've had the honor of sitting down today with Danielle DiMartino Booth. She's the CEO and Chief Strategist of Quill Intelligence, as well as a former Federal Reserve insider. Thank you so much, Danielle, for joining us today.
Thank you for having me.
And thank you, everyone, for listening.